In this video, we're going to talk about the news and how to manage your positions around the news. Now, I want to make it clear early on that we're not going to be talking about trading the volatility of the news because we personally don't do a great deal of that ourselves. So instead, we're going to talk to you, or we're going to focus on how you manage your positions around the news. So if you were in a position, what do you do, and all of that kind of good stuff. But before we get into it, it's important to understand what it is that we're talking about here. So every day, a country releases economic data, and pretty much every country in the world does this, although we're only really focused on the economic releases that are going to affect our particular positions. Having said that, you always want to keep an eye on the US data, even if you're trading one of the crosses, because the US data has an impact on everything globally in any case. Okay? So every day a country will release its economic numbers. So things like its unemployment numbers, its interest rates, housing numbers, its consumer confidence, just a whole raft of different numbers will be released every single day. Now, you don't have to be too worried with what each of them mean. We can use a different video to go into that. What we're focused on here is the volatility that's created around those particular numbers. So let's say 15 minutes before to around 15 minutes after, on average, the market is going to be affected by that particular news announcement and not by the underlying technicals or the fundamentals. Now, how can that be? Because the news must be in line with the fundamentals, right? Well, not so much, because a news announcement can be taken in isolation. So let's say, for example, the economies are in recovery, all of the numbers are good, and then you get sort of like a one-off bad figure. That doesn't mean that the overall fundamentals have changed or anything. That just means that there's one bad figure. And as a result of that, you may see some short-term volatility against the particular trend. But in the long term, it isn't really a game changer. Okay, they very rarely are. What you need to see is a series of numbers to see more of a game changer, if you like. So to see a big trend change, it's not just going to be one number in isolation. It's going to be a combination of different numbers over a series of different months that are going to cause a change in the trend. Okay, so the news announcements tend to affect the shorter term traders more than it does the longer term traders. So for example, if you're trading the daily charts or 4-hour charts or something like that, you will be affected a little bit, as in the positions may go against you a little bit, but more often than not, after a period of time, the dominant trend will then take effect again and your trade will move into the money. Whereas with the shorter term trades, because your stops are that much closer together, there is the potential for the news announcement to completely knock you out of your trade before continuing in the direction that it was just going in. Okay, so it can be a little bit frustrating from that respect. So as a shorter term trader, you probably want to pay more attention to it than a longer term trader would. Although I would recommend that whether you're short term trading or long term trading, you still do have an eye on it. But as a longer term trader, we tend to already be trading in the direction of the news. Because if you think about it, what I was saying earlier, that the news announcements over a series of months, a series of different announcements will kind of cause the trend. They will be what's pushing the trend in the direction. Well, ultimately, if the fundamentals are pushing the trend and you're trend trading, so you're swing trading the types of systems that we teach you, then you're more often than not going to be in the trade in the direction of the trend when the news comes out, which further backs that up. Okay, whereas if you're trading against the trend, then perhaps that won't necessarily be the case. So how do you manage your trade? Well, we have 4 kind of basic rules. If you're not in a trade, do not enter a trade. Now I'm talking sort of 15 minutes around the announcement if you're a short-term trader. If you're a longer-term trader, then you may not want to, and it's a big, let me clarify that. If you're a longer-term trader and it's a big announcement, so something like the non-farm payrolls or an interest rate announcement or something like that, then you probably wouldn't want to enter a trade on that same day. If you're a short-term trader, then you probably wouldn't want to enter a trade within 15 minutes to half an hour before or after a particular announcement. Okay, So if you're not in a trade and you're a long-term trader, then I probably wouldn't enter a trade on that particular day. Or if I did, I would monitor it very closely to see where it was half an hour before the announcement. If you were a short-term trader, then you probably wouldn't want to be entering a trade 15 minutes to 30 minutes before an announcement and 15 minutes to 30 minutes after an announcement. If you're already in a trade and you're at or around break even, then you kind of want to treat it as if you're not in a trade at all, which means get out of the trade, because if you weren't in a trade before that particular announcement, you wouldn't want to get into it. So if you're at break even just before the announcement, then probably get out of it and just save yourself some money and see what happens. Now, I'm not saying that, you wouldn't make money by keeping the trade on. That's not what I'm saying at all. I'm just saying that if you're going to trade the announcement itself, then ultimately you're taking a bit of a punt. You're taking a guess because you don't know what the announcement's going to be. So to take a trade based on, I think the announcement may be this, or I think it may be that, ultimately you're kind of just gambling. Okay, does that make sense to you guys? If you have a little bit of profit on the table, then you may want to do something different. You may want to either move your stop to break even or exit it altogether. Now, why would you exit it? Well, ultimately, these news announcements can cause a lot of volatility. And if they're going to cause a lot of volatility, that means that even though you have a stop loss in place and you've moved it to break even, you may still suffer some slippage. And that's basically the broker can't get you out at the price that you want, and you get out at a worse price. And maybe you lose a little bit. Not a great deal, but you may lose a little bit. Okay, so that's why you may want to exit the trade. So if you have some profit on the table, your two options are you either move it to break even or you exit the trade completely. If your trade is near your stop loss, it's very, very similar to if you have a little bit of profit on the table. You can leave the trade as it is, and hopefully the news announcement comes out, you get lucky and it pushes it back towards your profit target. But if you do this, you need to understand that you also may experience some slippage, and there's nothing that you can do about that. Okay, so with the economic announcements, again, there's volatility. So even if you have a stop in place, you need to be aware that you may suffer some slippage. So let's have a quick recap of what you do. If you're not in a trade, don't enter a new trade. There's really no point. If you are in a trade and it's at or around break even, then I personally would recommend getting out of it, because otherwise you're just taking a guess, you're gambling. If you have a little bit of profit on the table, then you could possibly look at moving your stop to break even. But if you do this, you need to understand that the markets may still break through your stop loss and you may get out at a worse price than break even because of the nature of what you're trading. Because the price can move very, very quickly and your broker won't have a chance to get you out before the price moves through your stop loss. If you're near to your stop loss, then there's no harm in just leaving the trade on the table, as long as you're willing to accept again that you may suffer some slippage. Okay? But ultimately, these are the rules that we trade by. You guys also need to make your own decisions as to what you're comfortable with. We're just giving you the rules that we use every day in the markets, and they seem to have worked for us so far. Okay, so that wraps up this particular video. I thank you very much for watching, and I look forward to speaking to you in the next video. Take care now.